The Federal Reserve, or the United States Central Bank, just published their FOMC minutes, which is a continuation of their previous meeting earlier this month. This has caused volatility in the market due to the US government publishing some economic data. Let's take a look at what's happening. Hey guys, welcome back to the Republic DAO's YouTube channel. So as you know, on the 27th of November, the Federal Reserve or the United States Central Bank just published their FOMC minutes. The FOMC minutes is commonly treated as one of the things that cause volatility in the financial market, especially in the crypto market. Well, a couple of days ago, the Federal Reserve just published their FOMC minutes, which talked about the economic outlook of the United States and the future policy of the central bank. Let's take a look at what the highlight is. The highlight of the meeting is that the Federal Reserve will start cutting down interest rates as early as next month. This was a continuation of the previous meeting, which was held earlier this month. As you guys know, earlier this month, the Federal Reserve decided to cut down interest rate as high as 25 basis points, going from 5% to 5.75%. This has caused positive sentiment towards riskier assets such as Bitcoin, as Bitcoin itself went up by 40% after the Federal Reserve cut down interest rate. Currently, crypto investors are predicting that this will happen again. However, the United States government has just published some economic data which might cause volatility and mixed reactions in the market. Let's take a look at what some of the data are. The first data is the quarterly GDP growth data. Looking at the current data, it can be seen that the US government is predicting that this quarter we will see a drop again in the GDP growth. This is because from the second quarter to the third quarter, we saw a drop at around 0.2%, going from 3% to 2.8%. This might cause volatility in the market due to uncertainty. This is because when the US dollar goes down, Bitcoin goes up. However, this is only valid in the short term, as in the long term itself, when GDP growth starts to fall frequently, it can be seen as lower purchasing power, which can equate to lower investment power, which can derive people from investing in riskier assets such as crypto to more safer assets such as the US dollar itself, or gold. Which is why, currently, this acts as a positive sentiment. However, if this continues, this might not be great for the crypto market. The next data is the PCE data, which acts as inflation data but from the consumer perspective. Currently, the US central banks decide interest rate based on core inflation data. They use core inflation data rather than inflation data because core inflation data has less volatility in it, which is why countries such as the US uses core inflation data and emerging countries uses inflation data more often to determine interest rate. Currently, from the monthly PCE perspective, it can be seen that the inflation is currently stagnating from September until October. This is a good sign, as stagnant inflation can mean recovery in the economy, because we are currently going down from a high inflation condition to a more lower inflation condition, so stagnation is good. However, looking at the yearly PCE, it can be seen that there is an increase, which can cause volatility in the market due to uncertainties. But the current inflation data can be balanced by the personal income data and the personal expenditure data. As can be seen, the personal income has risen. However, lower expenditure can mean lower purchasing power, which can translate to less buying power in the crypto market and other riskier assets. This might not be good in the long term, which is why we are currently in an uncertain market condition. Overall, the key thing to look for is the inflation data and the interest rate data. Currently, looking at the inflation data from last month, we are looking at a 0.2% growth from 2.4% to 2.6%. The next publication will be done in December, which is around 11th of December. However, looking at the core inflation rate, we are currently stagnating, which is a good thing, since the US decides interest rate based on core inflation data. The core inflation data will also be published with the inflation data, which is why these two data are important to look for when trading. Looking at the current Bitcoin chart, it can be seen that we just broke out of the uptrend that was continuing from the previous rate cut. However, there's potential for recovery, which can be determined by the US interest rate. In December, if the inflation rate goes up and core inflation stagnates, then we might see a consolidation between 99,000 and 85,000. However, if inflation goes down and core inflation also goes down, the Federal Reserve might cut interest rate, which can be seen as a positive sentiment for the crypto market. This can push Bitcoin above 100,000. However, all of this is still a prediction, as this is not financial advice, so you guys have to be careful and analyze it yourself. Overall, the key thing to look for is the US inflation rate, the US core inflation rate, and the US interest rate. Hopefully this information is useful and helps you navigate the crypto market. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when the next upload. Cheers, guys!